Howdy, and welcome back to the channel. You got Digital Asset Hutch here, bringing you all the know about the digital asset space and the US economy space. Now, I wanted to go ahead and record this video because I stumbled across an interesting tweet on the timeline. And as y'all can see here, our colleague Crypto Rover thinks that Bitcoin's going to hit 30,000 in February. So I wanted to highlight and get my opinion out there on this. So if you could go ahead and drop a like below and subscribe, that'd be great if you do agree or like any of the content that I am giving y'all here today. So I just want to first preface that this video is not financial advice by any means. This is just my own personal opinion, and I wanted to go ahead and record this to get my opinion out there, to start a conversation, and to hear some other people's thoughts on this. So let's go ahead and dive in. And first, I want to start with wallets that hold more than one Bitcoin, because I think this is a great starting point for today's topic, because it shows a couple of things in my opinion. For starters, I think it shows that we are indeed certainly out of the bear market and we have entered into the consolidation period. And I think that first starts with this area right here. So after that initial collapse, after that FTX, you can see that wallets exponentially increased by $60,000 or 60,000 wallets by 2 months, roughly. And if you look over here, about after the initial dump from the 2018 bear market, you see we also started to increase. Now, it wasn't exponentially as much as this, but as you can see, as time goes on, that trend kind of changes because it was more, it was a less steep slope here, and then over here we were just going to the moon. So I do want to start by that is also why I think it shows two things, because I think the adoption of Bitcoin has increased with just how steep that has gone up. It also could be that more people are consolidating all of their funds into one wallet of a ledger or some sort due to all of the exchange spheres. So that could also be the case. But I think that this is a good starting point because it took 3 quarters for us to grow to 60,000 wallets back in 2019, which is why it is the perfect segue into why I think 30,000 is actually possible from his tweet. I do think this is doable during this consolidation period. Now, unfortunately, I don't think it's happening in February, y'all. I think we have about 2 months, possibly even 3 to reach that before we have a last leg down of 50%. And the reason why I do think that is if we go back in time to after 2017 and that consolidation in 2018 to 2020 before the halving, we had a nice, what people referred to as DeFi summer in this area. And as you noticed during DeFi summer, Bitcoin actually increased roughly 318% in the span of 200 days. And these are all estimates, it's not exact, but that's a pretty nice pump for a consolidation period for Bitcoin. I mean, it's not what we're used to in the usual, 2,400, but I think anyone's happy with a 3x, 4x return. Now let's go ahead, and if we come to current time, where would that put us exactly on this chart? 200 days for 300%. Will put us at around 65,000, which is pushing an all-time high and puts us in June. Now, by no means do I think we're going all the way to 60,000, and we're not going to repeat DeFi summer. But I do think that this timeline could be important, which is why I don't think it's happening in February. I think it could happen around in June. Now, I don't think we're just going to, which is kind of what this box implies, because I do think we'll have a correction, or we're going to move a little bit sideways for those moving averages to move up. So that is something to pay attention to. But I do think that this is the appropriate timeline of what this pump will be for this consolidation period. Now, where do we go in terms of price? That's important, because if you go back, there's some interesting points that we start butting our head up against that starts turning into resistance. Now, this blow off top initially isn't really where I'm going to consider us hitting our head. I think we're hitting our head around that $12,000 range, because come up here, hit it up after a dead cat bounce. We pushed back up above it, but we hit it again, and then finally we hit it a third time back here. So I'm going to use that as kind of that initial line. And if you notice where it kind of lines up with from after that bull run in 2017 is it actually kind of falls into place in a couple of areas of where we corrected to after the initial blow off top. So we kind of came down, and after that first pullback before we got the dead cat bounce is an interesting area I'm kind of looking at in this one. Because as you can see, if we even pull it down just a little bit more, which gives us even more lines, we kind of use it as resistance again once we flip below it after that 2017 top into the 2017-2018 bear market. So let's kind of go over here and see where that could potentially be. So we had that first initial drop, or actually, I like to consider this the actual top because I think we just got so overextended. I think we were supposed to do something like this, but the whales just pushed the price up too much. So let's go over here. We came up, came down, so about right here, which as you can see, once we flipped it, we used it as resistance. So where does that put us? It puts us around $32,000. Now the reason why I want to just stay in that $30,000 range is because, I mean, we can use this actual bottom, but I want to use the candle. I don't want to use that just wick. I want to use the body of the candle, not the wick of the candle. And that just gives us this range of 30,000 to 32, which I think is a definite doable pump, because if you actually take that from the bottom, it's really only a 100% pump, which as you can see from the last cycle, it was 300%. So we're really only 2xing. So that's just why I think it will fall in this area. Now, where do we think we're going to go after that? And that's interesting because two things could actually play out, and what I want to do is let me go ahead and leave that on there so we can just have that as a reference. And this is just what I just like looking at historical TA. I do like looking at like TA on a shorter time frame for my entries, like I've mentioned before. But this is like the extent of TA for where I think we're going to go over a long period of time. I kind of do. I do look at other stuff that I can make some videos on for you, but yeah, I don't claim to be a technical expert by any means. I might be taking that test in some time, so if I do, that's when I might start considering myself, but just wanted to highlight that for you. So now to kind of highlight where we're going to end, it shows that we do have a 50% drop after it. Now, some of y'all might be asking, why, Digital Asset Hutch, why aren't you using this? Now, if you remember what was going on in the world during February 2020 and March 2020, I'm not going to name what was happening, but a lot of people got sick, which led to the economy going down a turmoil. So I don't think we're going to have another black swan event that leads to that, which is why I think it is important just to take it from there. But we can highlight both of them for y'all, so just remember 51%, and then also when you will remember 70%, which is also doable in Bitcoin. So everything is possible, but I just don't think another black swan event will happen. Knock on wood, everyone. So let's go ahead and take that. And as you can see, if we do have another 50% drop, it could and take us to 16,000, which would be a double bottom, which Bitcoin has seen in the past, and this has happened. Double bottoms actually are a technical indicator for flipping to a bullish trend on a macro basis. So I do believe that that is reasonable. That's another reason why I want to highlight that I don't think another black swan event will take that, because if we do actually go down 73%, it could take us to newer lows, which people are calling for, and that's I think how people are getting that 10K range, is just from taking and marking it from that past cycle. But I just don't think I see more of a double bottom happening. So that is my take on where we are headed during this consolidation period leading into that exponential pump after the halving. If you agreed with anything I said today, go ahead and drop a like below and subscribe to keep up with all my latest videos. But if y'all did enjoy, go ahead and stay safe. Bye bye.